All right. Good afternoon, everyone. We got a tough act to follow here today, so we're the B crew. But my name's Tyler Evans. I'm one of the founders of BTC Inc. and managing partner at UTXO Management. Excited to kick off this panel with some great friends. So to get this started, maybe I'll just turn it over to each of you guys for a quick introduction about you, your firm, and what you focus on in the Bitcoin space.
Hey, good afternoon, everybody. I think globally the toughest act to follow on Earth right now, but we'll get some people here in the audience. I'm Christopher Calicott. I'm a co-founder, managing partner at Trammell Venture Partners. We're based in Austin, Texas, dedicated to Bitcoin native venture capital investing. We've been our earliest investments go back to 2014, 2015 timeframe, and long term, we believe that this is where economic growth, value creation, job creation comes to the United States, and we're dedicated to it going forward, and glad to be here.
Awesome. Yeah, great to be here. My name is Vikash. I am a principal at Stillmark, so we're a Bitcoin-focused fund, so we're vintage 2019, so we've been doing this for a few years now. So we're deploying out of two funds, and our focus is specifically in Bitcoin financialization, the Lightning Network, as well as mining.
I'm Nico Lechuga. I'm one of the founding partners at Ego Death Capital. We founded the first fund in 2022, and then we just had a first close on the second fund. We are focused on investing in technology companies that are building on top of Bitcoin. We're writing lead checks at the seed and Series A stage.
My name's Alan. I'm one of the founders of Axiom. Very similarly, venture capital focused on the Bitcoin ecosystem. We just announced a couple of days ago, day one of the conference, we're raising our second venture fund.
Amazing. Thank you guys. Thank you for joining us. Well, I know we're supposed to be talking about investing in the Bitcoin ecosystem, but before we get to that, I want to open up quickly reactions to Trump's policy speech, things that stood out to you guys.
Extremely bullish. I think there was a lot of hype cycle leading up to today, a lot of Easter eggs, we'll call them, and stuff in the weeks. So maybe the perception wasn't like, okay, we're not hearing a whole lot new today. What I think was very important, clearly, is that it crystallized it. You can speculate about what Trump thinks, but to hear him put a fine point on it in terms of policy for the upcoming administration, I've actually never voted for the man before, but I feel like at this stage, it's so incredibly bullish for Bitcoin. If you're a U.S. citizen and you're not voting for Trump in 2024, it kind of feels like you're short Bitcoin. So,
I think just jumping in real quick, like it really helps on our end a lot of the institutional conversations. Like we talk about this at a lot of different partners within the fund of getting institutional buy-in is tough. Generally, you have one or two executives that are really into the space, but they're the risk trade for them to get their company to invest in something like Bitcoin or even Bitcoin venture capital is a big thing and can potentially cost them their job. I think whether you like him or not, this is pretty positive for our space and for the conversations that we have with institutional players.
I agree it was bullish. I think the speech itself was incredibly boring. Unfortunate missed opportunity. For what it's worth, I'll just encourage people to watch the RFK speech instead, which was fantastic.
RFK was phenomenal.
Yeah, I think just one thing I'll add is when looking at startups that are doing Bitcoin, wherever they are globally, we do have to pay attention to the compliance and regulation piece in that specific geography as it relates to underwriting those kind of investments. So with the U.S., there's been some regulation developed over the years, but the better we get at developing a regulatory framework and getting clarity on those things, the easier it is for people deploying capital into the space.
Bitcoiners have never historically asked for any favors. We just want a government that gets out of our way. I think the great pendulum of life has been swinging in our direction in the recent year and a half, 2 years, and it really just kind of echoes what's already happening under the hood. A return to American dynamism, the accelerationist movement, very strong points, and to hear support of go and create jobs, go build the future, and build it on Bitcoin. That we're just going to get out of your way. That's all I've ever wanted to hear. So,
I think what stood out particularly to me too was he called out specifically Operation Choke Point and the debanking, the financial war that's been waged across crypto, which is certainly something that our portfolio companies have felt in terms of even being able to open bank accounts, to be able to do business in the U.S. and anything in terms of just clear rules of the road and more integration of Bitcoin companies being able to work with the financial system would be huge.
Yeah, I think that's a big thing. I think that we saw in the past, call it 18 months, going into choke point, we had to have portfolio companies that engaging in different treasury strategies just from the standpoint of how they hold dollars in different bank accounts, having backup bank accounts, having backup bank accounts that potentially people don't even know about to move money into. And then depending on the stage with the company, having some degree of exposure via Bitcoin treasury. We want to be really careful about that because you want a company to be able to cash flow when you're doing that, especially at a super early stage. It can actually provide a lot of risk to the company and its underlying runway, but it's definitely something that we've had to think about a lot.
And if I may, I think it's probably worth just kind of giving a little color on what we mean by Operation Choke Point 2.0. As one concrete example, in the last couple of years, obviously there was a nearer term banking crisis. Multiple banks shut down and that sort of thing. In one specific instance, one of the banks that was seized and taken over by the federal government, they actually had very valuable IP, and it worked with crypto companies, with Bitcoin companies on the banking side, very supportive. When they shut it down, they let another bank acquire the bank and seize the assets. They refused to allow that one very valuable piece of IP be taken over in the acquisition. So that's the kind of like deep administrative state putting their tendrils into the way that our industry needs to work and that kind of support. So they've denied that it exists, actually, and it clearly does for people that are in the industry, so as an example.
I think the one piece of new info we got today was his pledge to fire Gary Gensler on day one. That got quite the crowd reaction going.
Hell yes.
All right, well, let's get into our topic of the hour a little bit, and to maybe start things off, wanted to ask you guys kind of just to give a little bit of kind of a lay of the landscape or a size of the industry. When we talk about investing into Bitcoin native companies, like what's the size of the investable opportunity? What's that look like in terms of startups, LP dollars, funds out there today?
Yeah, I can dive in. I mean, we're in a fundraising cycle right now, so and invest at two different particular stages. I think what we're seeing is if we're just talking pure play VC in the space and not with any token offerings that some of the new companies have and new VC players have, we see seed stage deals that are priced in the $2 to $4 million for the rounds, and then we see like Series A stage deals in the $10 to $12 million round size. So meaning that a lead in those rounds, we typically see in the seed stage writing like a $1 to $1.5 million check, and then at a Series A, I think you can come in at 5, 6 to 8 million. Basically, giving you an idea of like sizing.
One thing to follow up with at a kind of a higher level that I'm pretty sure all you guys will agree with. If you don't argue though, and that'll be really entertaining, is that I think. Trying to think of the actually simplest way to put this is probably that the demand for venture capital that understands Bitcoin. I'm being very specific in how I say that, so as to draw attention to the fact that most generalists don't, at least not yet. They probably will, but they probably don't now. The demand for venture capital that understands Bitcoin is significantly higher than the supply. And that actually, I think, so it'd be good to get Nico's take on this, given you're a bit further along in the fundraising cycle than we are. That there's basically it's kind of getting towards the issue of competition between us, which maybe we might dance around a little bit before, but we get asked this all the time. I'm sure you do, Nico, too. And this is by far the most important point that I tend to bring up. That it's, for now at least, I'm sure at some point this will change, but it's only really competitive on paper. And in fact, the likes of EgoDeath, Stillmark, TVP, raising it the way they're trying to, they've succeeded at, is massively legitimizing for the space and doesn't really translate, as far as I can tell, into any actionable competition, because the companies that are taking investment from us would so much rather have us involved, at the very least in generalists, and certainly than sort of crypto-oriented funds, which often ends up being their only option to fill out a round. If, as I suspect is still largely the case, generalists don't really get it. So I think it's worth keeping that in mind when we're talking about, the kind of the numbers that we're throwing out around the size of the companies. That's it's still very healthy, I think, from the position that we're in, like the opportunity that we have.
Yeah, I'll add sort of one perspective, which is when you get asked about the TAM of Bitcoin, right? In previous cycles, from the crypto side specifically, there was this narrative that there was nothing to build on Bitcoin, right? So the way that we've understood this, and you can look at Bitcoin from a few different angles. One is Bitcoin the asset that is emerging. It's emerging. It's going to continue to grow in market cap. There's tools that can contribute to the financialization of Bitcoin. And TAM, ultimately, the TAM is of money itself, right? So huge TAM, basically, in terms of what we believe Bitcoin to be. Then there's Lightning, right, which we believe we have the winning solution for the internet of money from a scalability perspective. You look at all the different Lightning integrations, Lightning for monetizing API, Lightning for music, Lightning for paying microtask workers, right? That actually can be applied to just about anything, right? You think that you can probably redesign any internet native business with Lightning, new business models. That's part of all of our TAMs, right? That kind of re-engineering. Now we have to understand how, when Lightning actually gets integrated, we can compete with these huge behemoths that have huge network effects, huge audience. That is, probably the million-dollar question for Lightning companies, but there's that. And then the crypto perspective, right? The things that were basically popular in crypto the last cycle, right? Just looking at, the applications that had a flash of product market fit. It was decentralized finance or financial instruments, basically built on the blockchain. So borrowing protocols, lending protocols, DEXs. Right? It was stablecoin activity. Much of it was used for trading. It was NFTs. All of these are coming to the Bitcoin ecosystem in some shape or form, in addition to Bitcoin, the asset, and Lightning.
Kind of putting a little bit of a finer point on the original question of the sizing of the market and the opportunity. I think TVP is kind of in a pretty unique position. We've been able to really track data the last 3 consecutive years, and we share it with colleagues in the space as well. We think it's really good. Kind of what I think Nico was saying earlier, the institutional allocation is really just something that's kind of at the cusp of getting involved. They've heard for years from these other, generalist crypto managers that nothing interesting is happening on Bitcoin. That's just false. It's patently false. And, in 2023 and 2022 as well, 2 consecutive years of Bitcoin native growth in terms of invested companies, the number of transactions in those logos together. So in 2023, for example, down bad year in 2022-23, crypto venture, meaning excluding Bitcoin native, was down on the whole about 35%. The transactions in Bitcoin native startup companies, software specifically, excluding mining operators and that sort of thing, was up about 69.2%. And interestingly, it's so early right now still. Typically the flow from the very earliest, the first money in, got a team and an idea all the way through late stage, the cadence is normally like a big cohort of pre-seed, a slightly less sizable cohort of seed, Series A and so forth. At the pre-seed, TVP's been predicting this wave of a growing investable landscape for a very long time, but the data actually says that's arrived. The first precursor wave. Last year in 2023, despite that gloomy backdrop, the pre-seed investable companies were up 360%. So that we think, and currently this year, it's tracking to surpass that yet again. So over multiple years, it's really growing. We're hoping that the institutional investors catch wind. Go read our research if you like. It's free on the website, and hopefully share it with some institutional investors. They need to have their ideas challenged.
Can I just follow up on that? They completely agree with the institutional investors' point. I was nodding along furiously as you were bringing that up. I want to throw in something that's a little provocative, though. I will see if I can trigger anybody to push back on this at all. That I actually think that obviously we do want it's very much in our interest for the ecosystem to grow. It's in everybody connected with Bitcoin for the ecosystems to grow. I think it's far better for that growth to be stable and healthy and actually basically reflect exactly the data that Christopher was just referring to, rather than outrageously explosive and then collapse. And I think this is basically what Christopher was alluding to in terms of institutions getting a handle on this, is really them unlearning all the bad lessons from crypto. Because basically when I'm painting with a bit of a broad brush here, but I suspect we all agree, when your business model is essentially to print money to the extent that you can sell it to anyone who believes the marketing spend that has got you to that position, there's really not a cap on that, right? You can take that to $50 billion or whatever as quickly as you can market to get the people in the room. What all of us are doing, or trying to do at least, is invest in and help build out real sustainable businesses. There will be a natural cap on that. So obviously we want the space to grow. We want the opportunities to grow. It's not going to be as outrageous as we're used to from crypto, but more importantly, as institutions have become used to from crypto and now need to unlearn.
I think this is super relevant, and like one of the points that we have that we like constantly hit with entrepreneurs and with investors in the space, we want aligned entrepreneurs and we want aligned investors, and part of this explosive growth I think goes back to like what's happened in the broader, call it like altcoin ecosystem with these token offerings and explosive growth in that way. When we think about like the origins of venture capital, the name actually comes from adventure capital. Like these were supposed to be your capitalists that were pushing humanity forward. And in the last, I would say 5 to 7 years in the broader crypto space, venture capital has been the quickest way to get a return on your money while scalping other individuals. And I think this is a really, really relevant consideration as we think about why we're doing this. We fundamentally believe that the technology that these companies are building on is superior to anything else, and that the returns will come, but like any other company where you're buying equity in it, it's going to take years. And there will be that J-curve and the explosive growth within that, but hitting a kind of all these things, it comes into Vikash's point on timing with whether it's a streaming music or it's an on-ramp, and to Alan's point of if we go back to the $2 to $4 million for a seed round and 10 to 12 million, I can tell you right now, nobody on that stage can write those checks by themselves. So it requires all of us working together to be able to do that.
Yeah, I think when thinking about sustainable growth versus explosive growth, right? I think one way to think about it is the growth should be relative to the value that's being created, and that's actual problems being solved, right? So when we had this DApp hype in crypto, for example, right? So think about Instagram on the blockchain, Twitter on the blockchain, right? So just to be clear, what they were talking about was the state of these applications, for example, the state of Twitter, the state of Instagram being persisted on a blockchain. So that means fees are being paid, actual transaction fees on some blockchain, so that people can read some public information about the state of your app, right? So this was what people were hyping up. There was all this Web3 hype in Silicon Valley, right? The current Instagram and Twitter that are not dApps have very performant UX, right? And they're highly optimized for that, right? So putting Instagram or Twitter on a blockchain is not really solving problems for anybody, right? Not anybody tangible, right? And one way to think about it is this. If you're going to have to pay fees to put all that state and persist all that state in a dApp on a blockchain, somebody somewhere is going to have to pay for it, right? Either the company's going to have to pay for it or the users are going to have to pay for it. And if you're not providing actual value, I wouldn't pay $10 a month for a worse version of Twitter, for example, just because the state was on a blockchain. Like, that's not something I would do, and I don't think that's something many people would do. You know what I mean? Like,
totally. Well, let's move on, pivot the conversation a little bit in terms of kind of the investing themes that you guys are excited about. Vikash, you mentioned Lightning a little bit, but as you guys have been talking to companies for the last year, what are the sectors where you've done deals? What's interesting in terms of trends that's investable for each of you?
I can take it. I mean, we've done some of the recent transactions that have been interesting within this particular space. Like as price action increases, we have exposure to Portco LN Markets that does derivatives trading built on top of the Lightning Network. So it has T+1 settlement. They have a DLC institutional application that will be released in the next coming, call it weeks. I think there's some pretty interesting use cases for that with some broader, call it industries within this space. That's been fascinating to us right now. I'm going to cede the floor, and I could go all day on that. But
if I can, I don't mean to be difficult, to push back on the question just a little bit, purely because we're deliberately quite vague in how we describe what the investable universe is, basically because we don't want to be overly prescriptive and rule out opportunities on the basis that we didn't anticipate them. And I think that maybe sounds a bit kind of overly intellectual, but all it really draws on is that we believe, and I'm sure you guys will agree with this, that Bitcoin is so important and so fundamental that it will eventually end up in everything. I don't necessarily know why. I think if I did, I'd be out building that company instead. But I'm trying to find the people who are. So it's kind of tricky. And then even to dive a little bit deeper, I mean, Nico obviously mentioned Lightning. Vikash talked about it quite a bit in his previous answer. Even that's difficult to pin down because Lightning ultimately amounts to payments. I mean, there's other ways you can use it, which we can maybe get into. It's kind of a niche topic, but a payment is half of every transaction. And so again, you're back to just, Vikash, you were saying, what's the TAM? It's money. It's like, okay, cool. Well, for Lightning, what's the TAM? It's transactions. I mean, I just don't think it's all that helpful to try to be that precise, at least for us. I mean, maybe if you guys are more articulate in how you communicate this to prospects. One thing I will touch on, though, is that back to the original question of the timing element of it, I think it's a really interesting time for, I guess you call it something like deep R&D in protocol development, which is something that I think Vikash, you mentioned this before about there being this narrative, or historically there'd been this narrative of nothing is being built on Bitcoin, which frankly I don't want to I don't want to trigger people too much. It was kind of true. I think it was being used disingenuously by the people who were saying it, but it was, it stuck because it was landing on a core truth. But I think that's very much changing now. So we're seeing things in zero knowledge rollups, in ARC, I be very careful to say that basically approaches to layer 2s, but which are actually layer 2s, and that's then leads right back into all the crypto shenanigans. So hopefully we can avoid, unless anybody wants to rail on that too.
No, I think this is really important. I think that all of these, like the theme thing, I think being prescriptive, like not being prescriptive and letting the entrepreneur run, I think the one qualification that I would just have with that, if you're building a company in the space or you kind of want to understand the investing philosophy, is timing is really key. So while like podcast or music streaming will work in the future, it's really key of getting that timing right, as we as capital allocators don't want to be right on theme but wrong on timing. And I think that that's something that comes up in every single investment decision that we are making. Like, do we believe the timing of this is right, or is this a theme that we should like mark on the board and then watch for this in the next 3 to 4 years?
I'd like to kind of tag on to what Alan was saying. I think there's something important there. We with Bitcoin as a community, back in the 2015-2017 timeframe, we took a very specific approach to scale in a layered approach with, SegWit was a technical prereq for the Lightning Network as one example. Building that is a lot like building the cathedral, not the bazaar. It's purposeful, it's methodical. Necessarily, mainnet with Bitcoin it's the highest of high consequence environments. And so there's relatively more narrowly scoped consequence by taking some of these risks at the higher layers. One of the things, concretely to your question, I think, it's hard to overstate the amount of unlock that it is. Inheriting all of the extreme low cost, globally nearly instantaneous, with bearer asset transaction finality from the Lightning Network, stablecoins are now actually possible as of earlier this week, at least on the L&D implementation. In 2022, an analysis by Brevin Howard said that we think about market capitalization a lot. That really belies the actual impact of stablecoins globally. There's about 11.1 trillion in settled volume 2 years ago, or 1.5 years ago. I've heard early reports that it's tracking closer to 20 trillion in this year. None of that volume exists on Bitcoin. And so what that can mean is simple exchange, dollar-denominated units to Bitcoin. But in the lower consequence environment, not on mainnet and over Lightning, so it's very, very fast to see that kind of get its way into all kinds of other applications. I think probably everyone would agree that's going to be actually a huge unlock for our existing portfolio, to say nothing of upcoming opportunities for new building. And so that's, for us, concretely a very thematic, important piece.
Yeah, so I'll sort of chime in here, talking about themes, right? So Lightning has been the initial scaling solution that Bitcoin has chosen, right? And when we look at scaling solutions with Bitcoin, right, there can be discussion of what is an L2, what is not an L2, but I think one way to look at it is that these are all solutions with a unique set of trade-offs, right? Lightning, is initially there was some marketing about the Internet of Money, right, in our cryptocurrency space, right? And we look at that from a scalability perspective, right? What is the scale of the internet, right? How many HTTP packets of data are basically being moved every second through API calls, right? It really probably is in the order of billions, right? So any notion of bringing money to the internet in that way, actually talking about adding money to HTTP, needs to actually roughly start approaching that order of magnitude if we're to seriously consider it, right? And layer 1 blockchains simply do not work for that. Any layer 1 blockchain. And more specifically, any system in which people are talking about global state right now, which is a very computer science thing, but I think we can simplify that to be every time you make a transaction on a system that occupies space in a layer 1 blockchain, you're automatically excluding yourself from not reaching anything close to HTTP scale, right? So for an application where you need one payment for even TikTok-like, right? It's not going to work on a ZK rollup. It's not going to work on a sidechain, and it even won't work on layer 1 blockchains, not even Solana. And maybe you can talk about zero knowledge with Solana and all of that sort of stuff. But really, Lightning is the one where it really does not have global state, and it actually is solving that problem in an elegant way. Now shifting the attention to rollups, right? I'm not here to bash on rollups. We're an investor in a rollup company. What are we getting, right, out of rollups, right? The thing that you're getting, it is a scaling solution for Bitcoin, right, with zero-knowledge cryptography. At some point, it is a separate chain whose state is committing to the Bitcoin blockchain and being compressed with zero-knowledge cryptography. The main thing that you're getting, in my opinion, is the extra programmability, right? All these rollups that you're seeing right now are EVM equivalent, meaning the actual developer execution environment that's being run is basically the same as Ethereum, right? So anything that you can build on Ethereum, you can build on these ZK, basically, rollups. There is now discussion, and I was talking with Alan a few weeks ago, that you could have also done this with Rootstock some years ago, right? So then there's another discussion on, okay, EVM on Bitcoin is not entirely net new, but rollups are, the ZK cryptography is altering that space of trade-offs a little bit, and there's more attention to the space too.
Well, I think the amazing part of like all this stuff, and there's a lot of new development in the space. There's a lot of arguments over what is a layer 2 and what is not. Is the beauty of like where we sit is we live in a capitalist environment, and the market will decide ultimately which one of these solutions work and which ones do not. And us as investors in the space can look at the data as it's coming in and decide where we want to place dollars and our time and resources and supporting those founders and hopefully accelerating their growth.
Well, that's perfect because I wanted to end our time here talking about L2's roll-ups. I know, knowing you guys, we could talk for a long time about this topic, but maybe to wrap us up here, would love to hear just kind of some closing thoughts from you guys on like is there a real opportunity with the so-called L2s that have been all the rage in Bitcoin this year, that have raised these mega rounds at $100+ million valuations, taking a whole bunch of different approaches from roll-ups to multi-sigs to tokens to pure equity and beyond. What do you think the real opportunity underlying this massive hype cycle?
I can jump in real quick because we've looked at a ton of these deals. The token deals, I think you have to put in their own category. So how the token deals work for the audience is the investors in the token deals are not concerned with the equity in the companies. They're not looking to grow long-term value of these companies. All they want are the tokens. The tokens vest over a 24-month vesting period. So if you've ever been an employee at a company and you've been given stock, like it generally vests over a 4-year vesting period. This is vested at 50% faster than that. At a 6-month period, there's a cliff, and you vest 25% of your tokens, and then on a monthly basis, you continue to vest on a pro rata basis. The tokens generally don't go live until the investor has invested enough tokens to when the investment, they can dump those tokens onto the market, which is the same playbook that's been run in Ethereum, that's been run in Solana, that's been run in Cosmos. And when you ask the entrepreneur why they need those tokens, they very, very much struggle outside of the community building and marketing component of it. And that's what we push back on every time. We'll take any conversation, we'll talk to anybody, but you better be really, really prepared as to why you need a token in your project.
I think it's a natural product of people that have been excited to utilize Bitcoin for a long time. They have the recent muscle memory from other areas. Their approach at first might be a little for Bitcoiners, maybe a little overly similar to elsewhere in crypto. What I think is very exciting, though, is that this wave of a return to thinking about building as a first choice, that's what's to get excited about. All of these technical enablements underneath the hood that are unlocking what's possible, and it's kind of up for us to figure out what's actually long-term valuable. What are going to be the long-term iconic brands from really the emergence of Bitcoin in the internet age. And so we're excited about that. We take a very clinical, dispassionate approach to what's valuable in terms of what approach is the correct one. We don't have a view. We look at everything and just try to make our decision. So ultimately, the portfolio can speak for itself.
Yeah, so my comment here will be, again, kind of referencing what the design space is opening up, with regard to Bitcoin development, right? So one way to think of this is prior to rollups, or basically just separating out EVM execution environments from developing on Bitcoin. We had Bitcoin script language, right? And we had DLCs, right? And there were clever ways, but more complicated ways, to build borrowing and lending protocols with DLCs, with the scripting language. But that extra programmability did make some of these things a bit more difficult, right? Like you can build a borrowing and lending protocol natively on Bitcoin with DLCs, and you're abstracting that liquidation condition to an oracle, right? So the DLC paradigm is whatever programmability you need, abstract it to an oracle, and the oracle attests to that, right? And there's certain trade-offs, right, in doing that, right? With ZK rollups, now anything that had that flash of product market fit in crypto in 2021, those sort of DeFi protocols that are borrowing and lending in a little more of a seamless way than you can do with DLCs, a little more of an efficient way because they have that extra programmability outside of Bitcoin script and DLC. You're getting some of that, right? You can even have something like a Uniswap or a decentralized exchange, for example, on a rollup, which was very difficult to do natively on Bitcoin script. Although one very clever guy managed to do it on the Liquid network, if anybody remembers this BitMatrix, because they had some extra opcodes there. So that's part of it. There's some interesting synergy also with just ZK rollups just generally helping scale Bitcoin a bit, adding some degree of private transactions and just general scalability, and even synergy with ZK and Lightning. So opening Lightning channels, for example, on a ZK rollup, right? Basically reducing the on-chain footprint on Lightning. So, I think from a design perspective, I think of it as Bitcoin script, DLCs, right? And then what else are you getting from EVM execution environment that we think is sustainable, back to what you were saying. Like, it has to be sustainable at the end. People have tried things on EVM, Facebook on blockchain, Instagram on blockchain. I'm not talking about that. I'm talking about what we actually think has some promise here.
If you can't unilaterally exit, it is not an L2. If you can unilaterally exit, that's because there's a synthetic equivalent of Bitcoin in the environment that can be used as money, and hence you don't need a token. Therefore, if you do need a token, I highly doubt I care about what you're doing.
Well, I think we can end it on that note. I know we could talk for a long time on this topic. We didn't even get into covenants, CTV, OpCat, all the new toolboxes, new tools coming in the toolbox to Bitcoin that we're going to see entrepreneurs and developers and founders run with. But for now, join me in giving these guys a warm thanks.
Thank you, Tyler.
Thank you.